This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to the American Monetary Association's podcast, where we explore how monetary policy impacts the real lives of real people and the action steps necessary to preserve wealth and enhance one's lifestyle.
It's my pleasure to welcome Logan Ransley to the show. He is coming to us from down under New Zealand, not Australia. No, Auckland, New Zealand. Beautiful place. And I recently saw a report that they published. He's the founder of Landlord Studio. And this is a real estate index report that profiles rental housing in the United States. Logan, welcome. How are you?
Very well, thank you. Appreciate you having me on your show.
Yeah, my pleasure. My pleasure. So first off, maybe just share with our listeners and viewers your overall take on the rental housing market in the U.S. What do you see happening out there?
So it's been very interesting this year. Obviously, it's been very up and down from, being able to anticipate what's going to happen. So we've seen everything from rental collected being dropped over time, and some of our users have unfortunately had to, fault on some of their properties. So for a long time, it seemed very grim, but it has actually picked up a lot over the last kind of 2 months. Interest rates are really low in a lot of places. So it's really a really good time to kind of invest in rental properties in general.
And when you say for a long time, it seemed very grim, you're talking about, I'm guessing, lockdown quarantine time, which was really only a few months. That was not a long time, but it seemed like a long time to some, I know.
Yeah, well, I think that for most people, it felt like this was going to take a long time to get through.
Right.
It felt like this lockdown thing was just going to last forever. But
right.
What we've seen is obviously it actually passed quite quickly. And even in the stock market, you saw this massive drop and then it picked right back up within a month. So it's been very interesting to watch that as a whole, I guess, and the impact, particularly on the residential rental market as well.
There's been a lot of talk about eviction moratoriums, tenants not paying their rent. And, I read that stuff in the news, and of course the news media likes to be sensational. Bad news sells, sensationalism sells. But we just have not seen much of that at all with our clients. It's like the tenants are paying their rent. There's really, virtually no problem whatsoever. But I'm guessing in some areas of large institutional properties, apartments, lower end workforce housing where there's, higher unemployment rates in like the service sector, I'm guessing there you do see a much more significant problem. I mean, our clients are doing single family homes. It's a real different market. What do you think?
Yeah, it's been really interesting from this perspective, because what our data is showing on our system is that, although rent is being collected, it's taking a little bit longer. But it's kind of going against this whole idea that's being shared through the media that there's mass evictions happening and people are losing their jobs and they can't pay the rent. In some cases, that might be the case, but overall, as a kind of aggregated and looking at our data, it's not the case. And the reasons for that may potentially be because the types of people that were affected might be in professional jobs, etc. They've got a steady income, they can work from home, etc. They can still pay the rent, but it might just be taking a little bit longer.
Sure. And, the other part of it is we blame the news media a lot, but really we ought to just blame Google and the way the search engine world works. It's really the way search engines work, because clickbait is how you get views on a YouTube video or listeners on a podcast. When you do a headline that says, mass evictions, mass wave of evictions coming, mass foreclosures coming, those things get the clicks. That works. I mean, it really does, because humans in general have a bias toward that kind of news. We all want to see sensational things, but the reality is just quite different, and it's pretty amazing. Why don't you share your screen with us and go over some of your report? You've got some graphs and charts, right?
Yeah, for sure. So I'll just share my screen here. This is our October version of the Residential Real Estate Index report. It's quite short and concise. What we do is we take around 10,000 active leases in the US and we aggregate it anonymously. And what this allows us to do is really piece together some of these trends that are happening. In this case, we've chosen rent collected. So that's landlords actually logging payments in our system. What some of these graphs are showing is that, there was a dip in terms of percentage of rent collected, like the completed rent in that period where we had lockdown and when COVID kind of hit in full force, but it actually picked up really quickly afterwards. What this is actually saying is that for that first month, we may have had quite a large impact, but that could suggest that, the market as a whole there was a lot of kind of fear, and I guess people didn't really anticipate what was going to happen. We kind of picked up to a bit of normality as the year went on. So in May, June, July.
Okay. And by the way, for those not watching this and only listening to it, I just want to tell them what that chart basically shows. Basically, we're looking at a chart here that shows a dip in April and then coming right back up way above that to 80% type level, by September. Yeah.
So essentially what this is saying is, although rent's taking longer to be collected, it's still being collected, which suggests that, these mass evictions that some of the media is talking about isn't actually the case in this case.
Okay, good. What else should we know?
It's really interesting because we've spoken to a lot of our users and we were really interested to see how they responded to this these circumstances. And many of them had obviously been affected by some of these late rent payments, but we wanted to kind of dive in to learn a little bit how they handled the communication with their tenant, and particularly how they retained their tenant so that they didn't end up with a vacant property. It's the kind of information that we learned from our users was, fairly standard around how they handled these comms. They set up contingency plans. They communicated with the tenants. They set up payment plans so that, the tenants could pay it off over time if they were impacted. But I think the biggest kind of lesson we've learned is how that you should be prepared for circumstances like this, particularly with just some money in the bank so that you can actually float these rental properties in the case of a pandemic like this.
Right. Yeah. Well, this was an event nobody was really expecting, that's for sure. But it's here, and I think everybody has learned a lot from it, and will be much more prepared in the future. So on the decrease, I'm looking at your graphics again here. You show an April decrease of 3%. And an October decrease of 2%. What do those numbers mean? Do you want to share your screen again?
So what this is saying is that when that COVID hit and the lockdown hit, we basically had a big decrease in terms of the total completed rent payments after a specific period of time. So we are looking at this trend over a 28-day period. And this is saying this is how much in terms of a percentage rent is being collected after that 28 days, which is 28 days after the rent is due, essentially. So the rent might be due on the 1st, but we're looking at this over a kind of the month period after that to see actually how long and I guess the percentage of completion over that time. So what this is saying is that, approximately, and the normal kind of rate is around the 75 to 80% completed by the end of that 28-day period.
So we have to divide up by the class of housing, of course. We talked about lower priced workforce housing. We talked about apartments versus single family homes. But what we didn't talk about is high density urban areas versus suburban areas. And suburban areas are faring very well. In fact, they're gaining in pretty much every way, as the urban areas are hurting and suffering.
Yeah, for sure. Yeah, so this statistics is taken off kind of a broad range of different rental class groups across the US, particularly from key states like Texas, California, New York, etc. We don't specifically go into individual areas as such, but it really just gives you a good idea about what's happening at a high level across all the different types of rental properties in the marketplace.
Mm-hmm. Okay. And go ahead and scroll down there if you would, and let's look at some of the other stuff. So there's the rent completion. Okay. That's the number of days it takes to completely collect that rent in the survey, right?
That's correct. Yeah. So basically what we're saying here is in March, there was 12 days in order to, over the entire data set, there was 12 days in order to reach 70% completion. And then in April, there was 19 days. So it actually took longer once we went into April. And then as we hit May, it kind of decreased again. And then over time, it decreased further. The really interesting part was when we got to October, which then it started going back up again. And these were just all kind of related to different trends that were happening in the marketplace at the time. And also very much directly related to the COVID impact and what was happening on like a nationwide kind of scale.
Okay.
And in the final part of our report, this is just really a summary of, I guess, from our perspective of why we're seeing these trends. So particularly in this report, it was about comparing it against what the media was saying in terms of the evictions that were happening, and then comparing it really to what was happening on our own data set. So from our perspective and from what our data had been saying is that, although the media was reporting these things, actually it wasn't the case, because essentially what was happening is that although rent was taking longer to be collected, it was still being collected by landlords. Yeah.
Okay. So just to wrap it up for us, if you would, with just your overall take on the market, where you see it going, just any other thoughts you have on the rental market, but feel free to speak to the sale market too. And, I guess that would, on your platform, that would be, are people adding units to their portfolio? Are they growing their portfolio size? Are they shrinking their portfolio size? That's in my opinion, a proxy for optimism or pessimism in terms of the market outlook.
Yeah, so it's really interesting. We've seen a lot of users selling off property, but we've also seen a lot of users expanding property as well. So it's kind of polar. From what my take on this is that essentially there's a lot of people that are still scared and fearful of what's happening. Potentially they are over leveraged.
Well, they also might need to raise cash. For example, if they're unemployed, they might need to cash out of the property. Even if the property is performing well, that is not necessarily the issue. The issue is what's going on in the rest of their life.
Exactly. So personally, I think it's actually a really good opportunity for buying into the rental market at the moment. Like, interest rates are very low, but from my own conservative nature, I would be hesitant to over leverage and take on too much debt as well. But in saying that, I think there's an opportunity at the moment for people to expand their properties and to potentially figure out a way of kind of retaining what they have rather than just selling everything off. But I also understand that in some circumstances that, a lot of people can't just do that.
Yeah.
So it's really...
You didn't break up this report though on geographical locations. I mean, even my mother, who has only sold one property in her whole life. She's just an accumulator she just wants to buy more and more. She is even thinking finally of selling off some of her portfolio in California because that state is so poorly run. I heard a funny thing the other day. I just got to share with the audience. Elon Musk, widely considered to be the world's smartest man, right? So, and he recently announced, he's moving to Texas, right? And, he's probably going to start moving his business affairs out of California too. But, so far it's just a personal move, right? And so the funny line is Elon Musk, the world's smartest man, is moving away from the world's dumbest governor, Gavin Newsom. I thought that was pretty funny. And, to see him leave the state. And so, it really matters what the geography is because people are leaving California, they're leaving New York, they're leaving Massachusetts, they're leaving a lot of these places and liquidating properties, but then they're buying properties, but it takes them a while to buy because if it's just their personal residence, they probably rent for a year and figure out exactly what area they want to live in the new city, or even if they want to stay in the new city. So, there's kind of a lag time there. It's hard to judge a lot of this stuff, isn't it?
What we'll be doing is focusing in on states to see the differences in terms of the data sets, because what we've personally seen from our customers and talking with them is it does vary depending on the states. And from what I've seen in the market, there are a lot of people leaving California due to various reasons, taxes or management or how it's run, etc. But it's something that we will be focusing on and releasing new, insights into over the future.
Sure. Good stuff. Well, Logan, thanks again for joining us. Appreciate it.
Not a problem, Jason. Really appreciate it.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.